Good morning, ladies and gentlemen. I hope you'll accept my apology for having to leave almost immediately. I dislike walking away from an argument, and I suspect there may be some, but in fact I have to go and chair a board meeting because we have some issues not unconnected with restructuring to deal with today. I don't think there's any need to reflect on why we're restructuring banks. We are well launched in the process, and I think that it's a process that we will be involved in for quite some time to come. I'm reminded of one of the mottos of, funnily enough, an Italian urban guerrilla group which had as its motto, "Lotta continua," the fight continues. I think we're going to be in that kind of situation in banking for quite some time to come. I'm not encouraged, I have to say, by the external environment. We shape policies according to our lights in the situations in which we find ourselves. I sincerely hope that we're not going to find ourselves in an even more dramatic external environment in the Eurozone. I have to say that as week follows week, I become less and less hopeful of a rational conclusion to the discussion that's going on now. Maybe more of that anon. If that goes wrong, we'll need restructuring even more than we need it today, and by God, we need it today in a very real way. The restructuring that's now taking place in Irish banking is, I think, more radical than anything that we might have imagined necessary in the immediate aftermath of the crisis just 3 years ago. There have been a number of factors at work. The process, I think, has been an evolutionary process rather than a planned one. And there have been a number of influences that have contributed to that fluidity in the process itself. The first is the level of stress, and I'm talking about stress in devising policy, that has been experienced both by Irish policymakers and by market operators in Ireland, because they've been dealing, in fact, with a set of issues with which they previously had no familiarity. We have never dealt with an issue of this kind, certainly not in my experience, and I don't think going back even further than that. We have, of course, two problems simultaneously. We have an enormous fiscal problem to deal with, and we have the banking problem to deal with. We know how to do the fiscal problems. We've been through that. We were through it in the late 70s and the 1980s. There are some signs, I think, that we've learned one of the lessons of that period, which is that the longer you take to resolve the fiscal problem, the more difficult it is. The longer you drag out the pain, the more painful it is, and the more expensive it is in the end. I have a feeling that the same logic will suggest itself in retrospect when we look back on what we're doing in terms of banking restructuring. We've been affected also not only by a very fluid policy background in Ireland, but an equally fluid policy background in the Eurozone. And that has become a bigger and bigger problem as we have gone through the period, and particularly over the last year. Partly as a result of that fluidity, only partly I think, we were not helped, I think, by the fact that it took 2 years to bring in the first piece of banking resolution legislation in this country, the Credit Institutions Stabilisation Act of 2010, which I think even its authors would agree is only the beginning of the construction of a banking resolution system. The creation of NAMA was in some ways a further complication in the process, not in itself, but it was an important piece of the structure of the restructuring complex that came into place before many other elements had been put in place, or indeed even imagined. I was thinking about that a while ago, and you know the old story, Aphrodite sprang fully formed from Zeus's mind. We don't have a banking resolution policy like that. So instead of Aphrodite, we have Nama, not perhaps the most attractive part of Aphrodite, and I'm not suggesting that my good friend Frank Daly is anything like Venus de Milo, but it's only a part of the solution. And the fact that we're doing some of these things piecemeal doesn't help with the overall design of the structure. Finally, a new element has emerged that will complicate things further for us, and that has been the recent evidence of a slowdown in the global economy. That isn't going to make the process any easier for a whole set of reasons, most of which are immediately apparent. In 2008, we can look at the list of the big players that we had: AIB, Bank of Ireland, Anglo-Irish Bank, EBS, Irish Nationwide, and ILNP. I don't think I need to dwell on the condition of those institutions 3 years ago. It's enough to say, I think, that if we had known then what we know now, we would have done a number of things very differently. But of course, that thought is of limited use, because what we have done and what others have done in the meantime, in the intervening period, inevitably affects the range of choices that are open to us today. In a sense, our history conditions where we're going to go next. And as we go through this process, our options begin to narrow. Today, we have two pillar banks, AIB with EBS, in a merged entity. We have Bank of Ireland as a pillar bank. We have ILNP, which I think can be classified as a survivor. We have, or will have, on the 14th of October, the magnificently named Irish Bank Resolution Corporation, which is the old Anglo-Irish Bank and INBS. And that's in Winesdown, and it's very carefully in Winesdown to avoid giving rise to events of default. I have to say, the name doesn't fill me with joy. There is somebody in our administration who would have been quite happy in the Kremlin. Whoever it was who invented the Covered Institutions Remuneration Oversight Committee, CIROC, could have invented NKVD too. We proposed a few names to the administration for the new entity. We thought they were quite snappy and smart, but they insisted it had to have bank and it had to have Irish in it. So we got Irish Bank Resolution Corporation, or One Brick, as I tend to call it in my own mind. And I hope that you're all too polite to remember that. In 2009, it seemed logical to envisage the continuation of the two largest banks, a consolidation of the mid-market players into a third Irish-owned bank, the consolidation of the remaining mortgage lenders, and continued participation by foreign banks in the Irish market. Today, I think there is no clear prospect of consolidating the former mid-market players into a third Irish bank. Talk about a third banking force seems to have gone out of fashion. I think for much of the time that was popular, it wasn't a very well-defined reflection. There are uncertainties still about the configuration of non-bank mortgage lenders. I think there's a good deal more work to be done there before we have a design that we can feel is reasonably definitive. And the non-Irish banks present in the market, and I hope I'm not putting words in their mouth, have more weighty concerns about their general activities than they have about their activities in an Irish market, which seems to be set to remain in the doldrums for some time to come. And indeed, it may be that their activities in the Irish market are a drag on their respective group businesses. The chairman talked about gloom. I think I should give fair warning. I was asked last year to talk to the alumni of the UCD Executive MBA program, and they said to me, would you come along and say something cheerful about the economy? And I thought for a bit and said, well, I'll tell you what, I'll come along and say something about the economy cheerfully. They asked me back afterwards, so it couldn't have been too bad. But I think the economic background, both for Irish banks and for foreign banks operating here, is not going to be a very exciting one for quite some time to come. So what are the things that we need? We need a banking sector that is capable of lending at a level and on the kinds of terms that suit the needs of an economy that will, we hope, begin slowly to move back onto a growth path after a period of structural adjustment. We'll need a banking sector that can produce financing formulae that are suitable to, first of all, that pattern of structural adjustment and then to an emerging pattern of growth. It'll have to have a healthy overall balance sheet, which by definition will be smaller than the current combined balance sheets of the Irish banks. It will need a restored capacity to attract deposits at a level and with a composition consistent with health in the balance sheet, and there are lessons to be learned from the pattern of deposit taking and funding that our banks involved themselves in up to September of 2008. It will need, of course, the capacity to attract deposits and other types of funding from outside the Irish market, since domestic savings in Ireland are unlikely to be sufficient to meet the needs of an economy that's beginning to move onto a growth path, as we hope it will. And that too must be done in a way that is consistent with the maintenance of health in the balance sheet. I'm not sure what kinds of conditions exactly will be needed or we will face in doing that. As we know, the Irish consumer's propensity to save remains high. That, I think, will continue to be the case for some time to come, particularly when you remember that mortgage payments are part of the definition of savings. I think it will take quite some time before Irish consumers can be relied on to be, if you like, a vibrant source of deposits for the banking system. There is a lot of evidence now also that the propensity to save is also taking the form of paying down pre-existing debt. So there are great limitations on the pool of deposits that will be available in Ireland for banks operating in Ireland. A reformed banking structure will need the capacity to be capital generative, and it will need the capacity to build confidence so that equity investors are ready to invest in the banking sector and indeed ready to invest in the Irish economy in general. Your past comes back to haunt you. I have heard it said to me on a couple of occasions in the last 2 years or so, words get quoted back to me. And I said, I'm totally against the state owning banks, which indeed I am, for a very simple reason. I think bankers can clearly, and history shows it unfortunately all too clearly, bankers can make some very bad decisions. But having seen the inside of the other system, I can assure you that politicians can make even worse decisions. And I don't like the prospect of the state being the owner of even a substantial part of the banking system, because there is a danger that political factors will intrude more than they should into the construction and the decision-making of the system. Indeed, in the last couple of years, we've had proposals for various kinds of banks that seem to me to be total non-starters, and happily it turned out the resources weren't there to do some of the things that were being proposed in terms of setting up development banks. You'll probably remember one proposal to capitalise a new development bank with €2 billion and to leverage that up to 20 billion for urgent infrastructure projects. That might be a formula that could work if it's properly managed, but I have absolutely no doubt that it would be properly mismanaged if it were being run in a political context. That leads me to the view that, of course, ideally, that banking sector that we construct should have more than two principal players, particularly as long as one of the pillar banks is largely in state ownership. Even in an economy as small as Ireland, duopoly is undesirable, not only for reasons of competition, but also in light of the need for a variety of services and for the capacity to dissipate sector concentration. I can remember the days, it's about 30 years ago, when you could sit down with the chairman of the Irish Bank Standing Committee. I have great memories of discussions with the late Bill Finlay, and you could come to an agreement with the chairman of the Irish Bank Standing Committee and know that the banks would deliver on that agreement because it was a very tightly organised cartel. I don't think that kind of structure is one that we need, and the fewer market operators we have, the greater the danger of that kind of pressure becomes. I see little prospect of any new market entrant in the foreseeable future, and I think there would have to be a significant recovery in the Irish economy before it becomes possible to attract new entrants to the banking market, with the possible exception of some niche operators. On the other hand, it has to be said that recent equity investment in Bank of Ireland is encouraging. It's a little bit ironic to reflect that AIB was identified by very important people in our banking structure as being the first putative candidate for sale to an outside bank. As John Lennon said, life is what happens while you're planning to do something else. I think the banking system should also have the resources, both financial and in terms of personnel, at least to keep up with the development of viable financing models adapted to the needs of the green economy. That seems to me to be one area where not only our banking sector, but the European banking sector generally hasn't yet developed an expertise or the models to allow it to participate in the kind of growth that is desirable there. So how do we get to that kind of structure from where we are today? I think we need to appreciate some of the things we're going to meet along the road. There will be some significant events along the way. I hope that one of them will not be a disaster in the Eurozone, but we'll park that for the moment. But looking at some of the relevant things that will happen along the way, I think we can spot a few. Anglo IBRC will downsize very substantially over that period. We have a 10-year time frame. I have some hopes that we'll be able to do it more quickly than that. It would be desirable to do so if it were possible. But it will downsize. We're in the final stages of completing the sale of the US book. We're making some progress on the UK book. The Irish book remains a bit of a problem. The government's expectation includes disposal of the INBS mortgage book within a few years of the integration of the two, indeed in the first half of that period. And there will be a continuing block of performing assets. So that's one piece that we're going to see along the way. Another piece that we'll see will be, as we hope, that the pillar banks make progress on disposing of the weaker parts of their loan books, but will still carry some volume of that. And the NAMA process, including the activity of the NAMA units within the banks, will continue. If all of those factors go according to plan, there will be a point at which it will make sense to question the need for the continuation of NAMA units in each of the banks, in each of the pillar banks, and question the need for the continuation of what remains at that point of IBRC. There will also be a point, and perhaps this will happen sooner, when it makes sense to consider further the consolidation of the domestic mortgage providers other than the pillar banks, although there we can expect demand for that particular service to remain very flat for some time. The foreign banks, with relatively small operations here, might find the continuation of those operations to be a very low priority in the context of their overall activity. So those are several kind of loose ends that will be appearing in the market. And it seems to me as if a plan to tidy up those loose ends, including dealing with written down impaired assets as they will be at that time, could perhaps be packaged and attract private sector investment on a scale greater than the minimum necessary to mount a speculative acquisition. I think as we go through the process, if it works in the way that it's designed, there will be times when speculative acquisitions will become interesting. And if we see the Irish economy beginning to grow, which I think we might well see from 2014 on, those kinds of conditions could arise. But if it were possible to plan the knitting together of the loose ends that I've described, I think we might be able to design a more fruitful prospect than simply a series of speculative purchases of existing operations. That might then be the means of attracting a new entrant and ending the duopoly with which we will be faced for some time to come. And I think that in that sense, the incorporation of the activities of existing non-Irish banks could give that new entrant or that new structure a platform from which it could gain access to external funding at a level and of the type that we will need to further the process of development. Restructuring will also require some continuing changes in the approach to regulation. There's a suite of actions that are required to go beyond mere policing and to go fundamentally into the implications of the big picture. But I see that I've now gone over my time, and I'm far too polite to talk about regulation in such a broad company, and I think I've probably got myself in enough trouble over the last 40 years not to venture into that particular bit today. Thank you very much.